And I
And
wanted to let,
you want cameras off too, right?
yes, please. Thank you.
Okay.
Thank you so much. Cameras and microphones off, please. And I want to let you know that I'm going to be recording this and I will send it out to everyone later this afternoon. Thank you for your polling to find out where you're all from. Appreciate that. And I would love to introduce right now Jessica Crannell-Menard. She is with NOW CFO, and she is an expert on financial matters, and she is going to give us an update on maximizing your PPP loan forgiveness. So I'm going to set Jessica's camera on as the spotlight video. And Jessica, you're on.
Perfect. Well, welcome everybody. My name is Jessica Crannell-Menard. I'm from NOW CFO. You've probably been on a couple of our webinars or presentations before, and I'm super glad that you guys are here with us covering this topic. It's very relevant. It's super sexy right now, really critical information that's been rolling out. So I'm looking forward to sharing some of this with you. We have a lot of updates to go through today. So I'm going to try to make sure I go slow enough that everybody can kind of understand and digest some of this information. So a little bit about me. So I helped start the Portland office for NOW CFO about 7 years ago. Our office is in Lake Oswego, but we serve the entire state of Oregon as well as Southwest Washington. We also have an office in Central Oregon covering Sisters, Bend, Redmond, La Pine, in that area as well too, that I helped start about 3 years ago. So I have about 30 accountants on my team, and they all help with matters like this, helping companies internally with all of their accounting functions, everything from CFO level work all the way down to bookkeeping and everybody in between. So not only have I been through quite a bit of training and updating on the PPP and the CARES Act, but so has my team. So we've been trying to stay quite a bit on top of some of the new regulations and guidelines that have been coming down the pipeline. So I'm going to go ahead and get started. And probably like some of you other folks here, I diverge a little bit here. I have 4 dogs behind me, and I'm the only one in the house today. So if you hear some barking and then I go on mute really quick, they've probably seen the mailman. So just bear with me if that happens. Anyway, let's get started. So, okay, like I mentioned before, we have a lot of new information coming down the pipeline. If you can remember back to March when some of this craziness was happening, we seem to be getting updates every couple hours or so, and now it's been to about weekly updates. When the PPP rolled out in late March, there were some changes that were made. Certainly back in mid-May, that's when the majority of the critical changes were updated. And it was funny, I just gave a webinar about 10 days ago or so regarding the May updates, and now all that information is outdated. So we're trying to stay on top of this as best as we can. So as a disclaimer, trying to give you as much updated information as accurate as I possibly can, but there are going to be some times when you might ask me a question and I'm just not going to know the answer just because some things are super fluid. So even with that in mind, I'm going to try to give you as up-to-date information as possible. I'm going to hide this video here. So just as a good overview of what the Paycheck Protection Program is, the PPP. So this was enacted as part of the CARES Act at the end of March of this year in response to COVID-19. So the government, the SBA, the Treasury, they came together and they said, okay, we want to help make sure that Americans stay employed and they keep their wages up to about as normal as possible. So I think that's a very critical piece of information for you to think of when you are thinking about how do we apply the PPP to our business. Is remember the goals of the PPP is to keep folks employed, to reduce that unemployment that we seem to be seeing quite so frequently here, as well as keeping them, keeping their wages up to the normal level that they were before COVID. So the PPP, they're offering a loan. It really is truly a loan program of up to $10 million, or generally it's going to be 2.5 times your average monthly payroll. So that 10 million is the cap. There are a lot of businesses that are underneath that. And so that's really to help maintain your cash flow, maintain payroll, and try to keep employee headcount to where it was before the bottom really fell out, right? So this loan, if it stays in a loan, if you are passing the forgiveness piece and you just want to see it as a loan, it's a loan and it has a fixed interest rate of 1%. So now here in bold on my screen, I highlighted that it now has a term of 5 years. That's a big change from about 10 days ago when it was only a 2-year term. Now it's a 5-year term. So that's great. You have a little bit longer to pay that back if you have some expenses that aren't forgiven or any leftover piece that wasn't able to be qualified as a forgivable expense. So really geared towards folks and businesses, companies that if you maintain your employee and your wage levels and you use the loan only for the other approved expenses, the loan will largely be forgivable, which is really great. So here it is. Here are your June updates. These are the most relevant and most up-to-date information that we have. So this was coming down the line into the House. It passed the House with a few changes to the PPP back in early mid-May. And so we were trying to stay on top of some of the changes there, and it went to the Senate. The Senate tossed back a few considerations. They approved some things. They didn't approve other things. And then on Friday, they made their final updates here. So some of these changes include businesses can choose to extend their 8-week period to 24 weeks. Now, where that comes into play, if you've been following the PPP, is you had 8 weeks from the day that that loan was dispersed to you in order to meet your headcount levels and your wage levels. So now that has been extended to 24 weeks from the date of your disbursement, so that loan origination, when that loan actually hits your bank account, 24 weeks, that's when you set your clock. We have a new change now. So before, it used to be only 75% of your loan funds needed to go towards payroll costs. Now that has been reduced to 60%. So now only 60% of the loan funds needs to go to payroll, and 40% can now go towards those other eligible expenses. I'll go into that a little bit more in a minute. Again, the loan term was extended to 5 years rather than 2, which is a really big deal. That's pretty great. And then another one here that is a big critical change is the new deadline to restore your headcount and wages will be December 31st of this year. So it might sound a little bit contradictory to what I just said with the 24 weeks versus 8 weeks, and then you're saying, oh, December 31st. Well, that's if you don't get your loan until quite late in the year. So money is still available through the PPP program. And if you haven't applied for that and you still want the PPP, I would suggest that you do so relatively soon. There is still money left. And so you have until December 31st, ultimately, to have all of those requirements met for the forgiveness piece. So if you received your PPP, you can actually defer paying payroll tax for up to 2 years, which is pretty rad, right? So regardless of whether you receive forgiveness or not, you still have this nice carrot here to where you can defer payroll tax. And that's split up half and half. So half of that payroll tax can be due at the end of 2021, so another year. And then the other 50% of your payroll tax for the year of 2020 can be deferred to the end of 2022. Whew, clear as mud. You guys still with me? All right, let's keep going. So a couple more June updates. So if you, the loan recipient, were unable to restore employment levels, this has been a big challenge. I've fielded a lot of questions about folks wanting to hire back in order to meet that forgiveness eligibility, but they're having some struggles. The unemployment payments right now are pretty great for those that aren't working, so that's been another struggle. So if you aren't able to meet that headcount level to the previous levels in February of 2020, which is their comparison period, then you can be exempt from penalties if these following situations apply. They have to be properly documented. So your business, if you can't find qualified employees to hire, but you have shown a good faith effort to hire and try to restore your headcount. So that would be an exception. And then secondly, if you can't restore activities prior levels due to health requirements. So for example, if you aren't able to provide masks or hand washing stations, or if it's very challenging for your business to have that social distancing of 6 feet. If you just can't bring enough people back to meet the safety guidelines, then that would be another exemption for you. That's considered part of the safe harbor language. So a good point about these 2 bullet points here, sub bullet points, is that they do require a really good effort. You have to show that you've made the effort in order to bring folks back. And with effort, you should be able to provide proof and have documentation. So documentation could be if you've posted an ad on LinkedIn to fill a certain position, and then you've counted the days for how long that ad was sitting there, didn't get any hits, or didn't have anybody that actually qualified. You should just be able to qualify and quantify your effort and show documentation that you weren't able to meet some of these guidelines. I'm going to go into more detail about this as well a little bit later. So prior to the SBA and Treasury, we had some forgiveness guidelines and additional updates in the month of May. Those still apply aside from the ones that have changed. I know it's clear as mud sometimes. So rather than your covered period beginning upon the loan disbursement, you can choose an alternative payroll covered period that might better align with your regular bi-week payroll. So there are some companies that pay the 1st and 15th of every month, or maybe they pay every 2 calendar weeks, or maybe they even pay monthly. There is an alternative payroll covered period that could be a little bit more appealing to your business, just depending on the dates that your payroll falls. So approved expenses, here's another big one, and I put it in bold, is so for your payroll expenses, or even for your mortgage interest payments, or any other expenses that can be qualified as forgivable, they need to be either paid or incurred during that covered period. So I've had questions on, okay, if Joe Schmo worked these dates and then he got paid afterwards, what is really covered? And it's covered when it's incurred. So again, it's a little funky here with the alternative payroll covered period, and I see a lot of you are blowing up the chat right now. I promise I'll get to your questions a little bit later. So with the paid or incurred, it's when these expenses were incurred. Something about that is you can't prepay anything. I've had questions about folks wanting to prepay for, let's say, their rent payments. You cannot use the PPP money to prepay for several months in advance. It needs to be paid for when it's incurred. So that's probably why that's in bold. So another clarification is, what is a full-time person? And the SBA and US Treasury are both in agreement that it's someone who works a 40-hour work week that is considered one full-time employee. If that person is on salary and they happen to work 60 hours a week, 100 hours a week, and they really are overachievers, that's still considered one full-time employee. It's not 1.5 or 1.7 or 2. It's still anything above 40 hours still counted as one person. And then forgiveness won't decrease if your full-time employee headcount reduction happens by if they are fired by cause. So if there's a performance issue, if they are routinely tardy, so fired by cause, if there's a voluntary resignation or they are reducing their hours. So let's say you have someone who's not comfortable coming back to work. Maybe they are, they have a compromised immune system and they don't want to be back in a working environment, or they decide that they only want to come back. They were a full-time employee and they just want to come back part-time. So that's how that second bullet comes into play, is they voluntarily resigned or they have voluntarily reduced their hours. And then lastly, your forgiveness will not decrease if you have made a really good attempt and a good faith attempt to rehire, but it was denied. So for example, maybe you had to let go of John Doe, and then you wanted to bring John Doe back onto your team. You have written documentation that you're offering John Doe his spot back, and then he says, no, thank you, I will pass. That would be an attempt to rehire that was denied. So with all of these, you might be hearing through the lines here that you have to have really good documentation, because that's how you're going to get the true forgiveness on this. You have to be able to submit proof, not only in your numbers, but also in what you've documented. So have a written statement saying that you are firing someone because of their performance, that it's cause-based. Or if someone is choosing to only go back to work part-time, please make sure you get that in writing so that you can submit proof along with your forgiveness application saying that we tried, but they just wanted to reduce their hours and that's why we couldn't meet some of the requirements. So just some really good tips there. Some of the other prior updates from May that still apply is that anything that happened from these prior slides here, like I said, they need to be documented, including denial if people didn't want to come back to work. Please have that documented in paper, save all that in OneDrive or one location so that's easy to access. For your forgiveness calculations, the wages will be compared to the first quarter of this year. So that's when they're still considering it the normal time. And how PPP is really trying to factor this in is that they want to see, okay, we don't want wages to decrease because of COVID-19 away from what someone would normally have made. So that normal period is the first quarter of 2020, which is January 1st through March 31st. Yes, I know COVID kind of happened a little bit before into March, but those are just the standard dates they're going to be using as their new normal. PPP loans, if you've received a loan that is less than 2 million, so you fall under that safe harbor rule too. Thankfully, you pretty much get a pass on not being federally audited, which is really great. You don't ever want to go through those. Those are a big pain in the rear. And the idea from that is that if you are requesting a PPP and let's say it's 2 million or less, then the idea is that you are a small business that has been affected and that you are making this request for this loan in good faith because you have had negative things happen to you, as in the loss of headcount and the loss of income. Another big one I get questions about quite often is about bonuses and hazard pay. People are trying to be really creative on how they can utilize their the PPP for the wages and other types of compensation. So yes, bonuses are now a forgivable expense. Remember, please document this so that you can say, Jane Doe had a great first quarter in her sales, and so that's why we're giving her this extra bonus. Again, just remember you're documenting these things so that you're able to provide proof. A really big one here at the bottom is the link to the SBA's website for the PPP loan forgiveness application. If you don't want to copy and paste that into your browser, you can just easily Google PPP loan forgiveness application. It should take you right there. It's a PDF. It's quite long. I wish I had made another slide on it, but I really do like the way they've structured their application, because for the first couple pages of the application, it's going to have a lot of definitions in there. That's going to be quite helpful for you if you have any questions on what does it mean to be paid and incurred and what qualifies as a full-time person. So they've gone through and already defined a few things for you on that application. So it also provides a list, what we consider a prepared by client, a PBC list of things that you want to have ready in order to complete this loan application. So there's the link there, but again, you can usually just Google it asking for the PPP forgiveness application. So here we are. So what are the approved PPP loan uses? So for the most part, this hasn't really changed, although sometimes the definitions have still been pretty vague, which has been made a little bit challenging to give very, very specific advice. But overall, number one is your payroll costs. So these would be wages, compensation. Here on the side is your healthcare benefits, and that's kind of part of your payroll costs. I had a great question. Someone asked, well, what about the cost to process payroll? Say if ADP or Paychex or Paylocity or whatever provider is charging me in order to process payroll, that is not a payroll cost because it's not actually wages and compensation. That is what you pay to a vendor for the service. So that, I thought that was a very interesting question and very thoughtful. So anyway, so all of the wages and compensation, now you have bonuses and hazard pay are also lumped into payroll costs. Again, your payroll costs need to be 60% of your PPP. Again, you have your healthcare benefits, so this would fall into the other category. So that's paid sick time, medical, family leave, as well as any type of insurance premiums. So with your insurance premiums, you have your documentation for that. If you're up for renewal, have that documentation as well. You also have your mortgage interest payments. So this is interest on real or personal property for business purposes. We also have rent payments. I did get a question about a storage unit that was used for business purposes only. That can be put into your rent payments because you are renting that space for your business. Something that you can have to justify your rent payments is a copy of your lease agreement. Also, questions I've received is, let's say your landlord needed to increase your rent because your rent was coming up to be renewed. And yes, you can count that increase as part of your rent payments. So if it went from, I don't know, $1,000 a month to $2,000 a month, you can still use whatever dollar amount that is as part of your rent payments. And then lastly, we have utility payments. So these are keeping the lights on, keeping the heat on, transportation costs come in here. I got a question about that. And that is if you have a company vehicle and you're paying for fuel, you can add that in there too as part of your utility payments, which I thought was pretty rad. So just as a side note on the left here, so your mortgage interest, your rent, and your utilities, aside from that fuel piece, I'll get to that in a second, they all need to be incurred before February 15th of 2020. And what that means is if you just signed a lease on a new building, that you've never had a new building before, it's not really going to count under the PPP. So they're trying to quantify your first quarter of 2020, which is why they're choosing this February 15th date. So if you have a purchased building and you're paying mortgage interest on that, then that would have had to have happened before February 15th this year. That was a mouthful. Okay, I'm gonna keep going. So again, one of the biggest things of the loan usage stipulations is that at least 60% of your PPP loan has to go towards payroll in order to be fully forgiven. You know, if you want to use more, if you want to use 70, 80, 90, 100% on your payroll costs, then great, that's awesome. But if you are not meeting that 60% threshold specifically used for payroll, you're going to be in trouble and jeopardize a little bit of your forgiveness piece. So simple math, the remaining 40% can be used towards some of those other expenditures, which was on the last slide. And a really simple way to calculate how you are going to be spending your money is just multiplying whatever you received in your PPP loan by 60%. There you go, that's your payroll threshold you have to meet, or multiply by 40%, and that is your other approved expenditures threshold. So here we are going into eligible and ineligible payroll costs. This has pretty much stayed the same throughout the entire longevity of the program. So some things to consider is when we're talking about payroll costs, talking about employee compensation as part of your payroll costs, it only goes up to $100,000 per employee. So if somebody is doing really well and they're making 200 grand a year in annual salary, well then this PPP is only going to be covering the first 100,000 of that piece. We also have your eligible payroll costs, so your payments for your vacation time, your parental, family, medical, or sick leave, if that's quantified in your payroll. If you have a severance package or an allowance for dismissal or separation, that can be part of your payroll costs. Remember to make sure you have that documented very, very well. Group healthcare benefits, including your insurance premiums, any retirement benefits, if they have a 401k match, put that in there as well. And then a statement of state or local tax assessed on employee compensation. Again, a good time to call up your tax CPA to see if they have any of that in there, or look into your payroll provider like ADP or Paychecks to see if they have those reports for you. So going into what's not covered, these are pretty simple things. So if your employee does not have a principal residence inside the United States, then sorry, not going to count. Also a big one here, payments made to independent contractors. So I know a lot of folks in the startup community, they first start growing their company by using 1099s, and then they graduate to bring folks onto payroll as W-2 employees. So you cannot count, specifically when you applied for PPP, you should not have counted the wages that you've paid to 1099 folks. Those were going to be completely different. And again, the theme is still the same. You cannot count payments made towards 1099s as part of your payroll category for your PPP, because it's not technically payroll. You're paying for a service and your 1099 is a vendor. For another good question about this, so 1099 folks and gig workers, they have their own application form both to fill out for PPP funds for 1099 and for the forgiveness application too. So they're kind of on their own. That way, you as a business owner do not need to put that into your forgiveness calculation. Again, not eligible for forgiveness is any compensation toward an individual in excess of an annual salary of $100,000. So that's your cap. Federal employment taxes imposed or withheld between February 15th and June 30th. So that's kind of a new one. And then your qualified sick and family leave wages for credit, if that's under the FFC CRA, the Family First Coronavirus Response Act, CARES Act. So that's not going to be counted towards your payroll cost in that 60%. So really a good list here of what is and what is not included. And then we go into the documentation. So I'm going to beat on this like it's a dead horse. You're probably going to get tired of me talking about it, but this is really critical. You need to be able to show not only in your numbers, things like how you've been affected, if you really did qualify. You need to take into account of how many employees that you had, the fluctuations, did you meet back to normal levels, and then if you reflected any change in wages and how you brought them back up. So number one here is being able to document and verify the number of employees you have on payroll, their pay rates, any of your IRS payroll tax filings for your 941 form. If you have bank account statements to show if you have like a payroll checking accounts that all that payroll money just comes from, that would be where your bank statement comes into play. Any reports from your third-party payroll service provider, like ADP, Paychecks, Paylocity, Northwest Payroll, and then your state, local income tax, payroll, and unemployment filings. So that's a lot to document and to keep on hand with you. Going to be really critical that you have all of these pieces of information for each and every employee that you have. And if you have a DBA versus a registered name of a business, make sure you have that all available at your disposal. Again, if you are an accountant, like anybody on my team, you're really good at hitting bullet point number 2, which is your receipts and your invoices, keeping copies of that, being able to verify. So here's my invoice for our internet bill, and then here's a copy of our payments. Just be able to have those two together. So just to document why and verify your payments on your mortgage interest, your rent, utilities. And again, those utilities include your gas, water, transportation, your actual fuel costs, and then your telephone and internet access too. And then we have this official certification. It's not as intimidating as it looks here on the bullet point. It's really just someone from the organization internally that can verify saying, yes, it's all true, and we're representing the company, and being able to put together that application form. And so lastly, your PPP loan forgiveness application, it's on the website for you. A lot of great information is already there. I strongly recommend that you go and take a look beforehand, before you start applying for your forgiveness, just to make sure you're hitting all of those points. So keep this all together in a really centralized location. I've even suggested, when you have and received all of your PPP funds, be able to create a secondary checking account that those funds just live in and that you draw directly from that isolated checking account. That's going to make it a whole lot easier to track the money that's coming in and coming out, rather than having it just commingle with the rest of your operating expenses. Just a really easy tip for there. So going back to an overview, and I'm not trying to beat a dead horse, but this is it can sometimes be pretty complicated. So your full forgiveness is really based on your employer maintaining both your employee headcount and your wages in a covered period. So that's for your full forgiveness. Your covered period begins on the date that the loan originates, so when it actually hits your bank account and it's ready to use. And then alternatively, if payroll is biweekly or weekly, this period could begin on the first payroll after receiving loan funds if you feel like that's more congruent with the flow of your business. Number two here, if your employer has laid off, or if the employer has laid off or furloughed employees or reduced salaries after February 15th in response to COVID, then they have until December 31st to rehire employees and restore salary levels. That's a pretty nice grace period. A lot of folks were really stressed out about this June 30th deadline, so they've given you an extra 6 months, which is really great. Now, again, forgiveness will decline if your headcount declines, and these exemptions under the safe harbor rule include if the offer to rehire was denied, there's voluntary resignation, or they gave up some of their hours, or if there was a termination by cause. Again, please document all of this. Lastly, your loan recipients have to prove that the loan was used on only approved costs. 40 or 60% has to be used on payroll. The remaining can only be used for these approved expenses. Again, you need to be able to provide documentation. Now, I'll go off script just a little bit to say that there are some folks that found it a bit more advantageous for their business for the sake of survival, really, to use these PPP funds on other expenses that are not categorized here. So for example, if you have other debt payments, if you really need to pay off vendors, or really anything else that doesn't fall under these categories, you are totally okay to do that. That is well within your realm. This money really is to spend on whatever you need to. But when we have the conversation about forgiveness and you don't want to pay it back, then you would have to make a change and say, okay, well, I need to be able to follow the rules. I have talked to some folks that have just needed the money to get by on some other things, and they only used maybe 20 or 30% on payroll and the rest on some other expenses that were pretty critical to their business's survival. And that was totally fine. There's no rules on what you spend your money on. There are just rules on what is considered forgivable. So if you are spending your PPP funds on anything else outside of some of these categories, then just know that it becomes the loan rather than the grant. And that loan is 1% is your fixed rate over the course of 5-year payback. So it's still pretty good if you had to get a loan for anything else. I think those are really great terms anyway. And so just something to kind of consider when you're weighing, don't always need to put all of your eggs in the same basket as far as forgiveness if there are other critical expenses that you need to pay for and this money really is available. So just something to consider. Again, we're just trying to stay up to date on all of these changes here. So I know I've been talking for quite a long time, but I wanted to be very, very thorough. So I'm going to run you through some calculations. I would highly recommend if you screenshot some of these formulas that I'm going to run through. I can always send out these slides to folks, and of course you have the recording. So I'm going to start running through a formula that will tell you what your reduced forgiveness dollar amount is going to be based on a couple examples. So I'm going to go into a reduction in forgiveness based on your decrease in wages. So if you've had to cut expenditures and cut payroll, and you were not able to bring these folks back up to our normal, let's go through this, this exercise right here. So just in the beginning, we've reduced the amount forgiven for employees whose average annual salary or hourly wages were reduced by more than 25% during the covered period as compared to the normal period, which is the first quarter of 2020. Remember, I'm going to use this calculation for an employee that was already making less than $100,000 in income salary per year anyway. So our employee here is employee A. So A was paid less than the 100,000, which was your cap. So that was what he made. Let's say he made 80,000. So that's what he or she made in 2019. So employee A, for the very first year, or for the first part of this year, this 8-week cover period, they were experiencing a normal pay rate of $8,000 for this 8-week covered period. So A was paid for $20,000 for the period of January 1st through March 31st. Sorry, let's say he was paid $20K for the first quarter, and then in this 8-week covered period, so covered period, COVID period, he only was paid $8,000. Good. Okay. So step number one into calculating this. Remember, we're talking about the reduction in forgiveness. So number one. So employee A, we're going to figure out your average annual salary was $52,000 for this covered period that the PPP is wanting to base your forgiveness over. So he or she was making buku bucks in the beginning of the year, but then he had to experience a pretty big cut. So we're going to figure out your annualized salary during that time. So it would be $52,000 is what he or she made in as an annualized salary as impacted by COVID. So step number two, your average annual salary was $80,000 for the normal time of the first quarter of the year before any impacts from COVID happened. And we figured that out because $20,000 made in the first quarter times 4 quarters in the year, he or she was on track to make 80 grand. As you see in step number one, they've had a reduction and now they're only on track to making 52,000. So step number three, you have 52,000 divided by 80,000. So they've only made they're on track to be only making 65% of what they would have been before COVID all happened back in the normal times. So before the application of the safe harbor, remember safe harbor is mostly talking about the reduction in forgiveness. This employer would have to reduce their forgiveness attributable to employee A by the following amount. Okay. So stay with me. I'm going to go real slow on this one. So they were on track to be making $80,000 for 2020. And remember, this actually should be 60%. So $80,000 times 60% would give a figure. Let's just say it's 60,000. So 60,000 minus 52,000, which is what they were annualized for the rest of 2020, because they had a reduction in pay. We're just going to calculate that as 8,000. So 8,000 times 52 weeks in the year, or excuse me, divided by 52 times 8 is $1,230. So that is the reduction that you will not be eligible for forgiveness. Okay, I went through that really fast. I know it's a little bit complicated. So we have to take what they were making before for the year, compare that with how COVID affected their salary moving forward, find the percentage of that. So they're only making 65%. And then we find out, okay, well, what were they making over another annualized rate? And so the reduction, if you had, you had $1 million in your PPP that you received, and you couldn't bring employee A back up to their normal levels in order to hit those time frames. So then instead of getting $1 million forgivable as a hyperbolic statement here, you'd have 1 million less, $1,230. Okay, that was a lot. Take a screenshot of this, and something to consider is you have to do this for every single person that's employed on your team. So you're gonna have to be running through these exercises here to see if you can't bring these folks back up to their normal levels and you wanna calculate, okay, well, how much is really gonna be forgiven? You're gonna have to do this math here. Okay, I'm gonna move on because we are starting to run a little bit out of time and have a few more slides left. So When we talk about the decrease in number of employees and how that affects your forgiveness, there's another one here, and I'm going to explain these three on the bottom, the 1, 2, 3. So we're going to first take all of your approved expenses minus your wage reduction. So taking that wage reduction from the previous slide, and then all of your approved expenses that you're using your PPP for, we're going to multiply that by here, this next section here. You have to have your average number of full-time equivalent employees for the covered period. A way to find this is if you've had good growth over the year, you can average that over several years to find out what your average number of employees would be, or you can compare that with some other time frames. So divide that by the average number of full-time employees per month of either, and now you have your choice. You can either choose the comparable time frame from last year. So I know some of you have your businesses, you guys are going like this, and that nice big hockey stick, and you're experiencing great growth. You can also choose the average number of full-time employees per month for the first 3 months of this year, so January 1st through February 29th, if that was a good period for you. So let's say you had just started your business and you didn't have employees in 2019, but you did in 2020, then I would suggest going with number 2. And then the third option is a 12-week period for some funky dates, May 1st through September 15th of 2019. The reason why there's an asterisk there is because there are a lot of seasonal businesses like landscapers or even construction that they want to base their prime time off of. So once again, you just need to be able to show documentation as to why you chose these dates. So you're taking your average number of full-time equivalent employees on top for this covered period, and then divide that by the average number of full-time employees per month of either the same period last year, 2019 as a comparable period, or if your business really took off, you didn't have any employees last year, then you can use number 2 for the first couple months of 2020. Or again, if you're very, very seasonal, you can use number 3. So there you go. I hope you have taken a really great screenshot of this. And you're gonna have to be doing some calculations and number crunching here. So we're talking about, and use this number, so this is the reduction of what you're not gonna be able to be forgiven based on this formula here. So another one we have here is if you borrowed $100,000 for your PPP loan on April 10th of this year, you are company XYZ, you incurred $100,000 of approved costs over the next 8 weeks. And for this 8-week period, beginning, for example, April 20th, let's say that was their next payroll that they ran, and they had the following employees. So remember when I was talking about how the full-time employee that is based off of a 40-hour work week, regardless if they did 45, 50, 100 hours, you're just doing 40 hours as your full-time employees. So with employee A, if they averaged 45 hours, it's still 1 FTE. Employee B with 40 hours, and then C, D, and E, they were less than 40 hours. So this is showing that over time here on the very bottom, laying my cursor over, as a comparable time last year, the same company had 6.4 full-time employees. Let's just say that they were doing really well. COVID impacted them quite a bit, and now the situation up here in the bullet points is more relevant. This is your current, what's actually happening with them, and they couldn't rehire. So your forgiveness amount would be capped by the following calculation. So if you received $100,000 in your PPP loan, and then you multiply that by 3.7 full-time employees, that's happening right now, over 6.4 full-time employees, which was your comparison to the same period of last year. And that is your forgiveness amount that's going to be capped. So you cannot be forgiven any more than that. So a way to bring this back up to your 100,000 in this example, to get this up from $57,813, if you want to get that back up and have that maximized, then you would need to be able to bring these folks back up to the number that it was before in the most comparable period, which was 6.4 rather than this 3.7 here. So you would need to rehire to meet this amount, or you could have them step up their hours. whatever that is, just to make sure that you are hitting that the same that you had in the comparable period of last year. Okay, so another good screen to screenshot to keep for your records as an example. So for your safe harbor exemptions, number one, the following has to apply. So if the total full-time employee reduction between February 15th of 2020 and April 26th of 2020, two really important, although albeit a bit oddball dates, those need to be restored no later than December 31st, which is great. You have more time. You don't need to rush into hiring new folks. And number two, if the total salaries or wages reduction from February 15th to April 26th is restored no later than December 31st of 2020. So again, giving you quite a bit more breathing room. This is a good thing. And then just another big reminder here, they have to be restored as levels, restored to levels as of February 15th of 2020. But I know there are a lot of dates running around. You know, this April 26th seems a pretty interesting date that they've chosen. And then December 31st. So again, you're going to have to make sure you write all these down and do those comparisons between your employees and all of your wage reductions as of those dates. So yeah, we're going to probably start feeling like this guy here on his desk, just trying to run all these reports and stay on top of these changes here. So some important considerations. So to be eligible for forgiveness, like I've been repeating, you have until December 31st of this year, which is really rad, to restore some salary levels and rehire any employees or just get back up to that headcount that you were experiencing before. So if your cash levels are concerning, you know, you may consider waiting to rehire or restore wages until maybe your county goes into phase 2 or even phase 3. Do what's best ultimately for your company to stay afloat. So based on these calculations on the prior slide, you should calculate if it's more advantageous to restore your wage levels and rehire employees to have more of the PPP loan forgiven, or based off of your own specific situation, if you need to make some layoffs and some wage cuts permanent, you can convert this into a loan to pay off the loan, and that should say 5 years. So now you have 5 years to pay off the loan, to pay off anything that wasn't forgiven, anything that left over, or didn't classify as a forgivable expense in itself. So 1% over 5 years, I still think that's a pretty good deal here. So again, we go into talking about some tracking strategies. Now that you are all experts in all of those calculations and your brain hasn't turned into mush yet, something incredibly important that I really stress on is being able to track everything. So plan ahead. Don't just kind of put these numbers and have them float around. Don't panic. Just have a really good strategy and build in some tools to help you plan for this. So building a tracking tool, what we talk about, generally they can be Excel based. I would say take this out of your accounting system. Be very methodical and very mindful of this. So create, for example, a list of employees from 2019 and the dates that they're employed. Have their 2019 wage levels for each employee. And then as a comparison on the next column over, have your list of employees and wages as of February 15. Have another full list of current employees, which might change and be a pain in the butts if you have a lot of turnover. But you're going to have to do these comparisons from time period over time period, right? So have a full list of current employees and then wage levels for each employee. Be able to do those comparisons to see where you are and where you're tracking, because that's going to affect your calculations from the previous slides to determine your forgiveness. Again, very simply, back up all of this data with some of your statements from your payroll system or any other supporting documentation. Keep these records all in one place. Some other approved expenses to track. If you have an internal accountant or an office manager or someone else that's just really amazing with paperwork and loves to do this stuff, we're gonna have to start talking about being able to track your other expenses that aren't related to payroll, right? So when you multiply your loan by 0.4%, or excuse me, by 0.4, which is the 40% that you're allowed to spend on other eligible expenses, that's to be able to cover your mortgage interest, other interest payments, rent and utilities. That is what the play money that you're going to be able to spend. So in your second spreadsheet, create a schedule of when all of these occur. So when do you need to make your rent payments? When do you need to make a payment on your mortgage? When does that interest come out? Just create a schedule of when that's coming so that you can manage cash flow and stay on top of that. So remember, I talked about cash flow last time. So these dates are pretty important for you guys. The document each payment, save the invoice and the receipt attached to that payment. You know, accountants, we love to do that. We have to have an invoice and a copy of the payment so that we can balance and reconcile them. And then label these payments based on their approved categories. So be very meticulous about what goes where and how you're storing your information. And then keep all of these records of your invoices and payments and receipts, any lease agreements, and then of course, any other types of documentation. Keep that in one digital file that's preferably backed up somewhere and pretty safe. So if you need help creating some of these tools and methods, especially when it comes to identifying wages and then being able to run through those calculations for what's forgiven, what's not forgiven, and how much money I have left to spend. It's almost like fund accounting, like my nonprofits. Please do let me know. My team at NOW CFO, this is all that we do. And we've been helping almost all of our clients either receive their PPP by putting their application together, but also staying on top of them, top of their business every single week to see if there have been changes in pay and changes in headcount so that we can make adjustments to these tracking tools accordingly. So this is definitely something that we can help out for you guys if it feels really overwhelming. Like I said, we've gone through a lot of training on this. So if this seems really stressful, don't worry, my team's got it and we've been on it pretty well. So to add some supporting documentation to your arsenal of proof, you're going to want to have your IRS payroll tax filings, have those handy. Like I said, your mortgage and rent agreements, any utility accounts in the business's name, have your previous tax returns ready anyway. I would think that's just a great thing to have on hand as a comparison to last year, what you spent on payroll as a whole, or what you spent on how many headcount you had last year as a whole as well too. So keep a really well organized spreadsheet of this. And so just as a good way to kind of back up all the things that you're claiming here. So another thing I want to talk about is to continually update your financial reports and your budgets. This seems like it, you know, from the first glance, this might not apply to what we're talking about with the PPP, but in truth, it really is. It's pretty important. So when you get a cash injection of, let's say you got $1 million from your PPP, that's really going to drastically affect your cash flow forecasts, what you have on hand. It's going to affect your break-even analysis. If now you have, I hate saying this word, if you have free money that is helping you with your payroll, which eases your cost of goods sold, that would affect your break-even analysis. That's even going to trickle down to affecting your budget for the year as well too. So when do we update these three key tools to use? It's any time that there's an impactful change on your business. So obviously, number one is if and when you receive your PPP funds, but also something as simple as someone going from full-time down to part-time. That's a really big deal. It's going to affect your forgiveness. It's going to affect these three tools here too. So you're going to have to maintain these up-to-date financials and make a change and update them whenever there's something impactful that is relevant to the PPP. It's also going to change a bit of your outlook too, to give you probably a bit more confidence in stepping out into phase 1, phase 2, and even phase 3 of all of the openings too. So have a budget on file for yourself, understand where your break even is. That break even might have changed now that you have your PPP funds, and then your cash flow forecast is probably going to change as well too, now that you have a really great cash injection to help take off payroll and some other costs for you guys too. So that's just about it for my presentation today. I'm looking at the clock and I'm just sneaking under the 1 o'clock time frame. So this is actually part of the NOW CFO webinar series. I've been hosting a roadmap to recovery overview. Don't worry about the slide too much. But I wanted to say again, for those, if anybody came on late, I am here to help answer some questions. For everyone that has attended, you are all welcome and totally eligible for like a free consultation session with myself and possibly somebody else on my team. If you just want to crunch some numbers and talk about some other questions that you may have. I've been seeing there have been a lot on the chat box here. I'm going to try to answer as many questions as I can. Cut me a little slack because some of the answers I might not have, just because there are still some vague areas, vague language between the SBA and the US Treasury too. So I'll do my best. I'll hand this over to Renee if she wants to kind of get started on some of the questions portion. I'm here to help answer anything as much as I can. Renee, do you want to take over?
Appreciate this is a ton of information explaining it. Can you hear me?
Yes.
Okay, good. My connection is a little bit unstable right now, so I just want to make sure that you can hear me. Thank you so much. You did a fabulous job of explaining up quite a few chat questions. So let's just go ahead and get started. That are these changes, for instance, the term of 5 years instead of the 2 years, applied retroactively to the loans that were already made?
Let me see if I can see this here too. Yes, yeah. So that applies to anybody who has received their PPP. It's not just new folks. If you just get your PPP now versus if you got it in April, they are just flat extending the term from 2 years to 5 years. And yes, the other terms that have been changed for June, those are retroactive. So they've just changed all these requirements. And they really want to get this done before the initial June 30th deadline, when that was like covered 8-week period really. So that's why they've kind of made some of these changes now. But yes, it's all retroactive. It all applies to loans whenever you started to receive them, and loans moving forward as well too. I think we're losing Julia or losing Renee here.
Hi, Jessica. I can jump in with the next question. So next question was, my bank already sent the loan forgiveness forms to fill in. They came from the SBA. Will new ones be generated now given the new rules? And do we speak to our bank that did the PPP loan about these questions, or is it better to go to the SBA?
Gotcha. So you should be working directly with your bank. So the SBA administers the program, but the program is actually run through your financial institution. So your current, wherever you receive the PPP funds from, so if it's Umpqua or Bank of America. And if they're, you should go off of the most updated documents, the application form for forgiveness that is on the SBA website. They're keeping that really up to date, which is super thankful. If I was you, Lynn, I would compare whatever you've received from the SBA or who else sent that out to what is right now available on the website. That PDF is really what they've been printing out and sending to other folks. So I would go off of the newest information, and that's easy to find on the SBA website.
Thank you, Jessica. Sorry about that. My internet went down, and so I had to get back in, and I have completely lost the chat, all of the chat. So you have it up?
Yes.
Okay, good. Thank you.
And yes, I mean, I think the next one that might make sense is, can we use it for payroll 100% for more than 8 weeks?
Yes, absolutely. Yes. So you just need to, so the 60% or beforehand it used to be the 70%, that's just the minimum. You can still use the whole thing just for payroll costs if you want. So if you didn't mind not paying, if you didn't want to pay it for utilities or rent or anything like that, and just wanted to use it for payroll, yes, good to go. all good.
And then can you clarify that a voluntary resignation, which would impact FTE levels, even if unrelated to any changes in the work environment or hours worked, will not reduce forgiveness?
Correct. So it doesn't need to necessarily have a reasoning. They just need to see, the threshold is they just need to see that somebody voluntarily resigned. So the reasoning doesn't quite matter. It's just saying that you, the employer, have done your best to keep head counts, but this was out of your control and you have documented that resignation.
Great. Renee, do you want us to keep going? And we're a few minutes after 1.
If anybody who wants to stay, please do stay. We can go through their questions until they're finished up, and it is recording, and I'll send out the recording to everyone afterwards. So if you do have to drop off, when your question gets answered, you'll see it in the recording.
Perfect. Okay, so we have one that says, we obtained PPP loan on 4/18. Can we opt for the 24-week period, but apply for forgiveness, say in mid-July, once we've already maxed out the total of the loan, since we started with the 8-week parameters?
Absolutely.
Specifically, okay.
Yes, you can opt for the 24-week period. Totally fine. You're going to be in the clear there. Since you started with 8-week parameters, we have to wait. No, you don't need to wait until 10.
Great. And then a question on the one of the slides, you talked about payroll needing to be, expenses need to be paid or incurred. So we paid Q1 quarterly payroll taxes after the start of our 8-week clock. So it was paid within the 8-week period, but incurred previously. Is the definition of or true? One or the other criteria is met, but not both?
So hold on, I'm trying to wrap my head around it because there's a lot of part of our so payroll, I see your question. So we paid Q1 quarterly payroll taxes after the start of our 8-week clock. It was paid within the 8-week period. Yes. So if it's paid within the 8-week period, then yeah, you can qualify that. So because you've made that payment well into your period, even though it incurred in the previous quarter, you can still add it into and qualify that. That's within your.
Great. Then there are a question about 1099 contractors. Applies to PUA for sole proprietorship owners.
So for the 1099s, the gig workers, I haven't necessarily been covering a lot of their own application. So I know that there's questions about sole props. For the 1099s themselves, the gig workers, all I know to my extent, because I focus more on the business side, is they have their own application and the language should be similar, but I'm not going to say that I'm the expert in that. So I would say that these would still be pretty transferable dates. The language would just be a little bit different, as in, okay, you as a 1099 would have expected to bring in X revenue for yourself and that revenue was impacted. So that's what you based your 2.5 times your payroll as. I can't quite answer that question very well. Sorry.
Okay. No, that's fine. That's great. And then there was a question that is, what is the grace period for PPP loans approved after April 2020?
Let me look at that. So your grace period, so for PPP loans, there really is no grace period because that's when your calculation starts. It's whenever it's dispersed to you. Am I hearing your question correctly?
I believe so. I think Emmanuel is still on, so I don't know if they want to clarify or add anything else to that question.
I guess the question is, when do you have to submit the documents for the payroll forgiveness?
When?
Yes.
You have until December 31st of the year.
Okay.
But if you have already gone through, so like in the question previous, gone through all of your dollars and spent up all your dollars, and you stayed within those guidelines, then you can apply for forgiveness as you use up your dollars.
Thank you.
Yeah, they more just give a date as far as by the time you have to send it in, because they have to process all of these. But if you've already met all of the requirements, spent all of the money, then you can apply for forgiveness as soon as you can.
Thanks.
There's a question about one of the formulas. I don't know if you could go back a few slides.
Which one?
I think the first one.
This one was.
This one, yeah. So the question was, I think at the bottom of step 4, it says 8 times 8,000 divided by 52. Is that what that last line is?
Right. And I was not necessarily being very helpful here with my own typo. 75% based off of the May numbers need to be 50. My error. So what they're doing here is trying to annualize. So in the steps prior, they're trying to annualize, okay, what did you make in the first quarter before COVID? Then after COVID happens, what were you making then? What was the annualized salary from then on? And so down here in step number 4, I'm just gonna kind of, I know it's not the right math, just bear with me. I'm just gonna use these figures for simplicity. So if it was 80,000 times, which should be 60%, it's not. Let's just say that you get 60,000 because we're trying to find the forgiveness here. And so 60,000 minus your 52,000 up here in step 1, which was your annualized salary from as it's impacted by COVID, equals 8,000. So that's the difference. That 8,000, they're trying to say, okay, well, what were you making per week then? What was the impact per week is what they're trying to figure here. And that equals 1,230. I know it's complicated for me because I have to think in reverse. I'm thinking about getting forgiveness, whereas this is a reduction forgiveness.
Got it. Okay, thank you. Next question is, somebody has an established work week of 37.5 hours, not 40 hours per work week. So would they then adjust their FTE for that?
Correct. You would adjust it to a percentage of what a full-time employee would be. So, 37.5 divided by 40 would be what your FTE calculation is. And that's shown on this slide right here. So that would be that.
So for somebody who works 37.5 hours, would they then technically not be a 1.0 FTE?
Correct.
Okay.
Correct. It might, so what the company, your business might say, hey, I want people to take Friday afternoons off, and your full time for the company is 37.5, but for the purposes of trying to just all things equal for the PPP, the government is considering a full-time employee as 40.
Got it.
May I interrupt? Because I was the one, I'm Tracy, I asked that question. But that does reduce the FTE, so it makes it the loan forgiveness reduction, it increases for us.
So it increases your forgiveness?
Yeah, no, it increases the reduction amount because they're not equal to one FTE. It equals to like 0.9. And
Right.
so, yeah. Are we SOL on that?
I don't know. I don't work for the SBA. Yeah, that would. So if you'd have to do, what is your comparison to your employees from the previous period? Have you been steadily adding folks, or have you stayed?
We have, but it's going to be pretty close, I have to say.
Okay.
But we have it in our handbook that it's an established 37.5-hour work week.
Okay.
I mean, everything's it's there. Now I have to adjust the FTE to that level. 80% of the employees are full-time anyway.
Right.
But they should get their one, right?
Right. Yeah, that's a good question. I haven't heard of that one before. So to get back up to the head count, I always like to play a little bit fast and loose and color outside the lines and be a little bit in the gray area.
Yeah.
So you could adjust your handbook, or just say that, hey, we're going to call you a full-time employee. We're going to say that it's a 40-hour work week for the sake of the PPP. And if you can document saying, oh, we need more staff on hand in order to meet demand or whatnot, be able to prove why you're doing that. And then you can pay them accordingly. I mean, pay them equal to the 40 hours.
Yeah.
FTE.
A question about that. Have your employees always been at 37.5 hours, or is that a recent change?
Always.
So wouldn't you be comparing like the previous payroll period with this one? And so shouldn't it not impact the calculations? That's a question for you, Jessica, I guess.
Yeah,
Sure.
See, and that's kind of where we play in the gray area, and where I feel bad about having not a clear-cut answer. The full-time employee as 40 hours, that's what they base their calculations on. But again, just like you brought up is, okay, we're comparing period to period, and if you still have 5 bodies working in your office beforehand, and then you have 5 bodies working in your office afterwards, and their hours haven't necessarily changed.
Right.
You haven't necessarily affected your head count per se.
Right.
So you could even just say, oh man, I wouldn't know. I'm trying to give you really good advice. I know what I know.
It's a tricky one. I've kind of struggled. I've started doing the numbers, and of course they ask for, total hours through all the payroll reports, and the hours aren't even going to match up.
Right. I would, if I was you, I would run both scenarios.
Okay.
So what you have now, based off of the idea that you haven't changed your head count levels. Okay, so everyone's about 37.5. Okay, cool.
Right.
Let's run that calculation versus if you made everybody 40 hours and paid them a 40-hour wage rather than a 37.5. That calculation.
Would you suggest maybe asking our lender?
Yeah, that would be
another thought.
Yeah, that could be another good one. They might have some more insight. Who's your lender?
B of A.
Yeah, B of A. So they were a pretty good SBA team. I've worked with some B of A folks here. I would ask them for clarification on that, because in my opinion, I always want to make sure, okay, let's do what's the most advantageous to the business.
Right.
So if you run through both scenarios, then you might find that, okay, well, we can just stick with the 37.5 and keep it like that. So we can talk offline about that too.
Okay, yeah, I don't want to consume. Thank you so much for your help on that.
That's a good question. See, I like this quiz every time I do this, just testing me.
I bet. Okay.
I did see someone ask if an employee has to be a U.S. citizen or permanent resident. Permanent resident. They don't need to be a U.S. citizen. They just need to live here in the United States.
Great.
That is-
There are a few more questions. One is for forgiveness calculation using Q1 info. In our case, we have new employees who started in February 2020. Thus, our payroll expenses during the actual PPP period is higher than the number calculated from Q1 of 2020. Do we get the entire actual payroll amount, which is higher than January through February 2020 forgiven?
I see your question here. I'm reading it. We have new employees. So congratulations, you're adding an employee headcount. That's totally rad. So your payroll expenses during the actual PPP period is higher than the number calculated in Q1. Do we get the entire actual payroll amount forgiven? You can. Remember, the PPP, all it cares about is that you spend at minimum 60% of your total funds on payroll. So if you want, you could decide that I want to spend, because we have more headcount now, which is super good, let's just spend all of the PPP, everything that was dispersed to us, on payroll. But then again, you would just have to offset and just be okay with not using that funds for the other expenditures.
Great. And then how long do we need to maintain employee and wage level? Is it only for the covered / forgiven period, or does it need to be for longer?
A good, tricky question. So it's not necessarily for the duration of time. Your levels, so both in your wages and your headcounts, need to be restored by December 31st. So technically, if you had struggled to find new hires and new candidates and new employees all year, but suddenly you had a stroke of great fortune and you found some folks and you were able to bring up headcounts by the end of 2020, then you would still be in the clear because you're following that I guess that expiration date.
Great. And then for the lease piece, if I'm assuming that renewed leases count. So in this case, their lease was renewed and signed in May 2020, right before their PPP period started. So that's fine.
Yes.
Great.
Okay.
And then for vacation pay, just to clarify, does it include the accrued vacation as benefits for the employee to use in the future, or is it only actual vacation pay that is paid out during the PPP period?
What is paid out?
Okay. And I think you've answered this, but does it matter if you apply the PPP loan to paying different employees from those used in the original FTE calculation?
It does not matter who you spend your funds on, as long as it's employee payroll. So this goes into the question of, okay, I had to let go of Jane Doe because of COVID, and then we got our PPP. I wanted to hire Jane Doe back, but she found another job. Do I have to hire the same person back? You do not. You just need to restore headcount and wage levels. So you can be different employees. They don't really base it off of the Social Security numbers.
Okay. Just a few more questions. When is the required date to submit the loan forgiveness SBA document?
By December 31st.
Okay. And then there was a question previously about sole proprietors, but in terms of from the employer standpoint, for any 1099 consultants, you're not tracking those. There's nothing that you do with them.
Correct. So from an employer standpoint, from the business standpoint, those are more considered like a vendor or a service provider, much like an attorney would if you have outside counsel, or if you have a tax CPA, for example. So your 1099s would not follow the rule, even though you're kind of, I get it, you are trying to pay them a wage, but the 1099 itself would file their own PPP for themselves. So you would not count any of those dollars as part of your application to receive the PPP, or you wouldn't would not be able to count that for forgivable expenses for the PPP.
Got it. Thank you.
And I know that impacts a lot of startups because a lot of you folks start with 99s at first and then kind of grow up to the employees. So that's a pretty negatively impactful verbiage through the SBA, which really stinks.
Yeah. Can you please confirm whether the expansion from 8 to 24 weeks also applies to qualifying non-payroll expenses?
Yes, it does. So it's across the board 24 weeks. Let me, I can go back. You can keep going, Julia.
Okay, the last question was, the original version of the SBA loan forgiveness application seemed to indicate we could choose the period that we wanted to compare FTE counts to. So in this case, they chose February 15th of 2019 through June 30th of 2019. But your slide indicates we have to use February 15th of 2020 for comparison purposes. Is that correct?
I have a lot of windows open, so let me see if I can go back to that particular one. So let me open up this chat one more time so I can see here. So we choose the period you want to compare full-time employee counts to. Slides indicate that we can use 215 to 220. The reason why I just referenced it's your bottom question says, but your slides indicate we have to use 215 and 20 for comparison purposes. I just use that one because that's the most commonly used, is to compare most recently what your head count was, for example. So generally speaking, as your company grows, you're adding more folks over time. So if you had more people the most recently, which was as of February 15th, I just kind of instinctively use that number. But for the employee, I'm moving over to the slide here. For this one here, when you wanted to choose, for example, what time period you wanted to do the comparisons over, choose whatever's most advantageous to you.
Great. Okay, I think those are all of the questions. Thank you very much for answering all of those. That was great.
Great.
Thank you. Thank you, Jessica. This was really, really super helpful. We really appreciate you staying longer. And thank you, Julia, from the Portland State Business Accelerator. I appreciate you jumping in when I lost my internet connection. And we are recording this presentation, and I will send it out to all of the registrants this afternoon, and a copy of the slides, so everyone will have that. And I really appreciate all of you attending today. And if there's no further questions, we'll wrap things up. Thank you, Jessica from NOW CFO.
Hope that was helpful, everybody. And as always, you're welcome to reach out to me. I'm happy to kind of have more of a one-on-one session with you to ask some of these questions, and we can go on Zoom and kind of work through this stuff too. So Renee and Julia will shoot out my contact information. And if any of you actually want these slides, please email me directly. So I'm not going to shoot them out to everybody, but if you do email me, I'll send them out to you and we can have discussion about them as well. So that's all. Thanks, everyone.
Thank you so much. Everybody have a great day.
Thank you.
Bye-bye.